Day traders everywhere around the world. My name is Daryl, and I'm going to be talking about the trade setup given to us by number 5 on the using the 4-hour stochastic and CCI setup. Okay, now my chart here is Awanda US, so the daily separators are for let's see, would they be midnight New York time. Okay, so you have to figure out from there what your brokers might be, but it doesn't really matter. When you're trading on the 4-hour, the setups are going to be pretty similar. So moving right along, somebody asked me about how I would go about starting with a 4-hour chart and then taking my entry off of a 15-minute. Now, any combination is worthy of trying out. I picked 4-hour and 15-minute because the 4-hour, I believe, as number 5 says, gives us a great idea of what's going on with the trend, and so it's probably more accurate than trying to trade on a 1-minute. And then using the entry on a 15-minute, I only am doing this on a retrace. Now, in some cases, price will just continue without stopping to pick up any passengers, and that happens, and that's okay. And on a retrace, I'll say this again at the end, you don't want to enter at a worse price than you would have had you got in on the 4-hour. For instance, the entry just using the 4-hour would be right here on this candle. The stochastic was above the 80, or at least touched the 80. It came back down through it, and then our first CCI confirmation was this orange bar down here. By the way, this is slightly different. It's a little bit visually easier for me because we have a green bar if it's over 100. We have an orange bar if it's under 100, giving us, making it visually easier to see what's going on. That's just my opinion. So getting back to this, if our entry on a 4-hour chart is going to be right here, we obviously don't want to get in any lower than this, than the close of this 4-hour, because then we're using up some of the travel of this trend. And trends don't last forever. So for instance, if the entry showed up down here, I wouldn't want to take it because we're already about 8 pips lower than the close of the 4-hour. And once again, this is the dollar yen, so that's why these bars aren't really big for 4-hour bars. Okay, but to show you how this works, I picked this one here because this one is actually a perfect setup, so I don't have to get into the details of this, that, and show you, a perfect setup, and then I'll show some other setups that weren't quite as easy and maybe didn't even happen, so that you can use that information to make your own judgments on how you want to trade this yourself. Okay, so here we have a 4-hour setup. Stochastic comes down, crosses this above 80, comes down, crosses the 70. Confirmation down here with the CCI. Okay, so now I mark the time on here, which is up in my data window on the left-hand side or down at the bottom. Both numbers are small. Don't know if you can read them, but this is April 24th, and the time on this candle is 00. So I don't start looking at 00 when I go to the 15. I'll start looking at the close of the 3 3:45 candle, because obviously that's when this one actually closes at 4 o'clock. Since it begins at 00, it closes at 4 o'clock. And then the new candle here begins at 4 o'clock promptly. Okay, so down to the 15-minute. So we can set this one up. All right, so on the 15-minute chart now, the arrow is marking the close of the 00 candle. This is 3:45, 03:45. So we're looking now for the same setup. Same setup being we're looking for the stochastic to rise above 80 and then fall back below 70. And that with confirmation of the CCI going below 100, at 100 or below. And right here, we can see that that happens on this doji right here. So that means we would have an entry right at, let me drag this down here. The entry would be right at the close of this doji, which happens to be 119.34. And now, sorry about that. Okay, my stop then, I'm going to put just a little bit above the last swing, and the last swing is 24 pips away, so I might go about 28. And also you might want to add in a stop. And since I'm using this method and it's on the dollar yen, I'm not, I don't want to ever use a stop on a 15-minute greater than 30 pips. So that's our risk. I also don't want to use a stop less than 10 pips plus the spread, or maybe even 15 plus the spread, because you want to give price a little bit of time to move around. Okay, that being said, in this case, this being a perfect example that I picked out, price ends up, the maximum travel is 58 pips. So once you figure in the spread, maybe about 55 or 56 pips. Okay, with your initial risk at about 28. So that's, in this case, that's about double. Now, how you want to handle your risk management, I'm not going to begin to tell you how to do that. That's totally up to you. What I might do is, say, pick a 1-to-1 or somewhere around there, or maybe even go back in history on this chart and look and see if I can find a level, or maybe some of you like to use pivots, whatever. But I would probably not take, I would probably use maybe 2 positions and maybe take my first profit out at around the 1-to-1 area. And that, once again, that depends. Now this first swing that we're dropping below is about 20 pips. You might want to take some of your profit there. I don't know. And then maybe leave your stop up here, or maybe move it to, say, 20 pips, a 20 pip stop, and then that way this is a free trade. You can have a free look and follow it however you choose. Okay, well anyways, I hope that was clear and not too difficult to understand. But let's take a look at okay, June 24th on the 4-hour, because on June 24th was a setup that clearly would have kept me out, because that's how I traded. Okay, so June 24th. Okay, actually the setup begins, this is the 4-hour chart again, sorry. This is the 4-hour chart, and the setup is right here. Price on the stochastic goes below the 80, comes back above the 70, and then it's confirmed by this bar down here that goes above 100 on the CCI. Okay, so actually you see I'm on the yellow mark here. This is 99. Um, on your discretion, you might want to use the 99 or the 100. There, it didn't matter to me. So sometimes when I see that so close, I will go ahead and take it. So you might want to take this one. Anyways, the result would have been the same either way. But so here we go. So here is, okay, I said June 24th. This is June 22nd. Okay, and as you can see, price just kept going up and up and up, and there was no retrace um, below the opening price. The opening price being right here, and in fact, well, I mean, there was a slight one right here, but that was right maybe at or maybe just what, 2 pips, 3 pips below. And I don't even know if that showed up on the 15-minute chart. I wasn't that interested after price had already gone from where we would have wanted to enter on the 4-hour. It had already gone up 100 pips. So actually, had you just traded straight off the 4-hour on this one and got in here, you would have been fine, even with just this small stop here of, well, this is only 8, 10 pips here, say 20 pip stop. You've been down here someplace. And, that would have worked out fine. However, that's rarely the case. Okay, so this one, okay, anyways, I covered that. That's June 22nd. Actually, what I wanted to do is show you is June 17th, which is actually this one right here. Pretty much it's the same thing. So, I mean, you may want to just stick with the 4-hour entry. However you want to do it. This 4-hour entry here would have been just fine. It just went straight down. Now, the stop on this one would have been a little bit tricky if you're just using the 4-hour candle. That's a 45 pip stop. You might want to go down to a smaller time frame and maybe pick a level someplace in here, which is fine too. That makes your stop a little bit smaller. And then I'm going to finish up here by this one, and this is how this can work for you. This is on June 25th. Okay, and as you can see, this was the close of a Friday, and then Monday, actually Sunday night in the States, opened up with a big old gap. So this would have been a sweetheart, but this is how those entries on smaller time frames can work out. So June 25th at 2000, we go down to the 15-minute, and go to June 25th at 2000. Okay, here we go. So, at any rate, this would have been the entry right here. Well, excuse me, this is the 4-hour close of the candle we were just looking at. I'm on the 15, back to the 15-minute now, sorry. This would have been the 4-hour close on our signal candle from the dollar yen. And so now we're waiting for a retrace, which retraced quite nicely here, and a retrace, and then a close, retrace above the 80, which this did, but there was no confirmation in the CCI. Once again, it did it here, no confirmation in the CCI, and up here, and then it dips here below 70, and we get a confirmation right here on this candle. And on this one we would have had something like about, this is 20 pips to this swing. Since it's the weekend, I would have probably gone all the way to 30, somewhere around there, to account for opening and closing spread differentials. But as you can see, this one, it even opened up like 125 pips in profit. So, I mean, there will be serendipitous ones like this. This is is one of the advantages of going to a smaller time frame. However, we also saw a couple of trades where entering on the 4-hour would have been great. So the decision is up to you. I've offered some ideas here. Maybe you can take these ideas and improve on them. I'm not trying to tell anybody how to trade. That's your business. I'm not trading your money, nor do I want to. So that's it for now. This is Daryl, and thanks for listening.